Welcome back, ladies and gents. Today is the final video in the series on order blocks. I want to talk to you today about refining your entries and getting a higher risk to reward ratio when taking your trade setups. So let's get into it. I had outlined this order block already, and so this is the block. This is the 1 hour time frame. And we're going to refine from here. You can apply this concept whether you're coming from the weekly, the daily, the 4 hour, 2 hour, however high you're coming from. It's the same principle. I just didn't want to have to search through all the price action because the more you break it, go down into the lower time frame, the more you have to search to find the point of interest. So just to make it easier, I'm starting at the 1 hour. All right, so this is the 1 hour block. I'm going to drop to the 15-minute time frame, and once you're refining, you want to make sure that you stay inside the original point of interest. If you find that you're going outside, it's either the entry won't be correct, you'll be stopped out, or your entry would not be triggered. All right, so this would be the new block. Right. All right. Then I'm going to go straight to the 1 minute because you can skip the levels in between depending on where you want to take your entry from. So let's see. The last candle would be this. Right. All right, so I'm going to go over a few details after I've outlined the block. Right, so just to give you some tips, because we're now refined down to the 1 minute time frame. I will go back and show you the difference in terms of the risk to reward ratio when I'm through with the explanations. All right, so we notice that from the order block, which is this, price rallied up and immediately came back to the order block here. But if we were to look at this from the 1 hour perspective, would not be seeing so much price action. We'd be seeing less candles, maybe 1 down candle and 2 up candles or something along that line. And we would not be seeing this breakdown here. So this is how the smaller time frame will help you to better see the price action that is taking place inside your point of interest. And what you'll be looking for inside here is a sweep of liquidity and break of structure and mitigation. So in this small area here, price rallied up, internal range liquidity swept, came back, and then rallied off again. Same thing happened, and then mitigated the order block, rallied off again, took liquidity here, no matter how small it is, mitigated this order block. But if you were to actually take your entry from this side of the price action, you'll be taking a risk entry because the truth is you do not know if price is actually going to go further in the direction that you're wanting it to go, because in taking the entry here, we're expecting bullish price action. And so you also have the confirmation entry where you can wait for price to do its thing over here, but give it the confirmation because you're seeing more key structures, levels of structure being broken when you wait on the confirmation entry. So we can see we have multiple levels here, 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 almost up to there. So we're waiting now for price to come back to the same point of interest and actually give us our entry, because we would have seen a significant break in structure, and we're seeing more liquidity grabs, and because this is a wider area, it's way more confirmation to take the trade. And after seeing all of that, then you would have set your pending order, because if you had set your pending order from here, you would have, if price was not going to go in your direction, you'd have been stopped out in the next leg, because it would have been as if you took the trade here, you saw this price action and thought that price was going in your direction, but in truth it was continuing down. So that's why I would say the confirmation entry is better most times. But of course, it depends on your risk appetite and how you trade. And with the confirmation entry now, we could have taken the entry. Would have waited now again for price to do its thing, give us the break of structure, clear liquidity, and here mitigated. The mitigation here is in the breaker block here in this area. And you can see the big difference in the size of the entry. And if we are to look at this from here, we're looking at 3.92, call it 4 pip stop loss. And then we go to the higher, back to the higher time frame to look at your targets, and you take your targets, you measure your targets from here. So assuming we caught this entire leg, which I actually did on Friday, yesterday. I'm recording this on Saturday, today. So assuming we caught this entire leg, first take profit would be the first highs here, second take profit third, and you leave the rest to run up to there. And this is let us see, what is this? This is a 57, almost 58 to 1 risk to reward ratio trade. If we were to have taken this trade from the 1 hour time frame just as it is, the stop loss would have been huge, and of course the risk to reward would have been way less. And even if we took it on the 15-minute, it would still have been a bigger stop loss. Point. We're looking at this is a I don't think that's correct. Hold on. Oh, I didn't move this up. Let's see. This thing's correct. Let me delete that and put it back. So the entry would have been here. Stop loss would have been here. Didn't realize what I was doing. And of course, take profit here. And that's the difference. A 3 to 1 as compared to a 58 to 1. That's a lot to miss in terms of profits. And if you have the time, I would say take the time to refine your interest, refine your point of interest, and get it right. It's way more profitable. I hope this was helpful. I hope the entire series helped you. And of course, you can always rewatch to cement things in your mind. And if you have any further questions, you can let me know in the comments. Thanks so much for the support. Yeah, and I'll continue probably with another series, or just continue to do more videos on how you can improve your trading and be more consistent and profitable, where profitability comes in with how you operate. Yeah, so thanks a lot, and Happy holidays when it comes. I doubt I'll put out another video before the holidays. So a Merry Christmas and a Happy New Year. And we look forward to 2022 and for better things to come. Have a great day. Bye-bye.